Okay, so we've dug deep into Indo-MIM's business operations. We've mapped out their market risks, and we've pored over their overall financial performance. But now, we've finally reached the elephant in the room. It's arguably one of the most critical questions in any IPO. How is this company actually being valued? To find out, we are turning strictly to the draft red herring prospectus, the DRHP, and we're zeroing in on the basis for offer price section. This is exactly where we get to see how Indo-MIM is justifying its proposed price tag. It's the central question every single informed investor has to ask before a company hits the open market. How on earth does a business set its initial price? Well, in this explainer, we are going to look exclusively at the quantitative and qualitative factors that the management team has actually disclosed. We aren't making guesses here, and we certainly aren't bringing in outside market assumptions. We are strictly decoding the hard numbers right from the source document. All right, here's our roadmap for this explainer. First up, the IPO pricing framework. Number 2, earnings and profitability. Third, we'll do a net asset value breakdown. Fourth, comparing the global peer. Fifth, justifying the offer price. And finally, number 6, watch points and takeaways. Let's dive in. Section 1, the IPO pricing framework. Let's start with the basis for offer price. So what exactly is the basis for offer price? Well, every DRHP contains this mandatory section. It essentially lays out the specific quantitative and qualitative factors that management is relying on to determine their price band. We are going to strictly decode this disclosed framework today, really trying to understand the exact mechanics of how the issuer arrived at their valuation. Moving right along to Section 2, earnings and profitability. Let's look at the financial performance. To really understand profitability on a per-share level, we have to look at earnings per share, or EPS. Think of it like this. It's simply the portion of a company's total profit that gets allocated to each outstanding share of common stock. It is a totally fundamental metric for gauging profitability, and it's a huge core component of management's pricing framework. Now, when we look at the restated consolidated financial information, we're seeing some real fluctuation in Indo-MIM's EPS over the last 3 fiscal years. In fiscal 2023, basic EPS was sitting pretty strong at 9.64 rupees. But then, there's a noticeable dip in fiscal 2024, down to 5.89 rupees. However, by fiscal 2025, it bounced right back up to 8.79 rupees. Now, this kind of yearly roller coaster volatility, that is exactly why management calculates a specific average. Right, to smooth out those wild yearly fluctuations, the DRHP spotlights a weighted average basic EPS of 7.97 rupees. What management does here is they apply different weights to the recent years. They place a higher weight, a weight of 3, on the most recent fiscal 2025, and a lower weight of 1 on fiscal 2023. So this resulting weighted average of 7.97 rupees, that becomes an absolutely crucial baseline figure in management's pricing justification. Section 3, Net Asset Value Breakdown. Time to talk returns and book value. Our first metric in this section is Return on Net Worth, or RoNW. This essentially measures how efficiently a company is generating profit relative to the equity held by its shareholders. Basically, for every rupee of equity in the business, how much profit is actually rolling in. Management loves to use this to signal their capital efficiency to potential investors. And if we look here, following a very similar pattern to the EPS we just saw, RoNW was incredibly high back in fiscal 2023 at 25.37%. It contracted sharply in fiscal 2024 down to 14.01% before stabilizing at a really healthy 19.94% in fiscal 2025. When you apply management's weighting formula to this, the weighted average RoNW sits at a very robust 18.87%. Okay, next we need to look at the underlying book value of the company itself. We measure this by net asset value, or NAV. NAV is quite literally the total value of an entity's assets minus its total liabilities, calculated strictly on a per-share basis. It basically tells us the bare bones value of the company's equity if you were to just break the whole thing down today. According to the DRHP, as of March 31st, 2025, Indo-MIM's NAV per share stands definitively at 45.63 rupees. Now, a quick aside, it's vital to note that the post-offer NAV, which means what the book value will be after all the new capital is raised, is currently just marked with empty placeholders in the DRHP. We simply won't know that final number until the actual price band is set. But for right now, 45.63 rupees is our definitive pre-offer baseline. Let's jump into Section 4, Comparing the Global Peer. Establishing a market benchmark. So the DRHP explicitly states this really fascinating fact. Because of Indo-MIM's massive, unique scale as the largest global manufacturer of precision engineering components using metal injection molding technology, management believes there are absolutely zero listed peers in India. None. To find a comparable business model, they literally had to look globally. And for this disclosure, they managed to identify a single lone-listed peer, Jiangsu Gian Technology, which is listed over on the Shenzhen Stock Exchange. If we look at this side-by-side comparison, Indo-MIM reports higher revenue, over 33,000 million rupees, compared to Jiangsu's roughly 26,700 million. Indo-MIM also showcases a higher basic EPS of 8.79 rupees versus 7.92, and a significantly higher return on net worth. We're talking 19.94% compared to the peer's 6.13%. Section 5. Justifying the offer price. Let's look at the valuation equation. But right here is where we hit a massive valuation watchpoint, the missing PE ratio. In the DRHP, Indo-MIM's price-to-earnings ratio is currently just marked with a placeholder bracket. You might be wondering, why? Well, because the PE ratio is calculated using the final cap price, and since the final price band hasn't been announced yet, that multiple simply doesn't exist on paper. We are quite literally missing half the equation. So the absolutely crucial point here is how this sets up the final valuation test. The Chinese peer, Jiangsu Jian, is trading at a PE multiple of 80.03 according to the DRHP. Meanwhile, Indo-MIM's PE is pending. Once that final price band drops, investors and analysts are going to calculate Indo-MIM's PE using that fiscal 2025 EPS of 8.79 rupees, just to see exactly how it stacks up against the 80.03 benchmark. Now, while we wait for that final price to be announced, management does give us one more vital baseline number, 496 rupees. This is the weighted average cost of acquisition, or WACA, based on primary issuances over the last 3 years. Essentially, this tells us what shares have been valued at in past private primary transactions. In the final prospectus, management is going to explicitly state how many times a multiple the new cap prices is compared to this historic 496 rupee benchmark. Finally, Section 6, Watch Points and Takeaways. Let's wrap up with our final observations. Okay, let's distill all of this down. Here are your core takeaways straight from the DRHP. First, there are no listed Indian peers. Management is benchmarking this company on a global scale. Second, their fiscal 2025 basic EPS recovered well to 8.79 rupees, and that's backed by a historically strong weighted average RoWN of 18.87%. The pre-IPO net asset value per share sits at 45.63 rupees. And finally, their sole global peer trades at a PE of 80.03. That is the ultimate benchmark to watch once Indo-MIM's final price band is officially released. All of which leads us to the ultimate question you should be asking yourself as we eagerly await the final red herring prospectus. At what PE multiple will the final offer price actually place Indo-MIM against its global peer? You see, valuation is not just about whether a company is fundamentally good or bad. The real key question is what exact price is being asked for that business. In our next explainer, we'll continue analyzing the shareholder and IPO-related aspects disclosed in the DRHP. Until then, keep an eye out for that price band.